Good morning, everyone. Today is the 13th of January and Tuesday and a CPI day. So we expect some volatility. Now that yesterday we haven't had the volatility, we did have quite a lot of movement in the market. That's mainly due to some news about the Fed Chair Powell being prosecuted or something like that. The details are not that important. What is important is the fact that the market absorbed that information. So if we look at what happened in the market with that consideration, yesterday overnight there was some news about India dumping US US debt. So they previously bought US bonds, and now they were dumping them, and that's the movement you see here. Initially taking price to here, right about 25,750. This was in the initial leg of. Let me 1 second. Let me do demonstration. This was the initial leg of the London session, going back up, and as I said yesterday, we were expecting price to retrace, but then and that's because price was already reaching the CME risk interval low. If you don't know what that is, please go and find my trading view page, and you will see an indicator there. That's basically calculating the distance in the market based on which CME calculates margin requirements for the dealers. So price comes down. We were expecting a retracement into this big old weak block here, and retracement it was, until some news comes out about Fed Chair Powell being prosecuted, and that's immediately taking price lower, squeezing everyone. Now at 4, when the overnight session, the extended trading hours for the QQQ options market ended, everything is being retraced. So this becomes non-news this point. When the US market opens, regular trading hours open, this part about the news about Fed Chair Powell becomes non-news. Everyone that was short here is underwater, and this is what happens. All the shorters get squeezed on the way up. So it was quite a interesting day, a fun day. I actually enjoy seeing that kind of market reaction, because it, to some degree, it becomes predictable, right? It's psychology of the masses. Now, what do we see today? So price, leaving all that aside, we were looking at the 4-hour chart, where we said yesterday that we have had external range liquidity, looking for internal range liquidity, now back to external. And we are back to external range liquidity. And what else do we see here? We see that we don't have clear change in the state of delivery on the I'm on the 7-hour chart. Let's go to the 4. It's basically the same thing, because if we look here, we do have some liquidity being taken by this high here, and we have a retracement into this range, and we have a continuation here. But overall, this is just an impulse flag, right? Our bigger picture range is this one. So you look at this high to this low. If we mark this as a range, right, we have had external range liquidity into internal relative to this one, here to here, internal, now back to external range liquidity. So our ultimate drawn liquidity is this one up here. And let me mark that with the trend line. Oh, but not that, not like that, not like that. Marking that with the trend line, and I'll make this as a ultimate draw on liquidity, right? So let me remove this range because we just need this line. Okay. We have then the move that we were following up until now. So this external relative to this range, external range liquidity into internal, changing the state of delivery here and back to this. Now, if we want to see information related to today, what else do we need to do? We need to look at this range specifically, this little impulse that was formed yesterday. So this low to this high, right? Let's change this to a range. And what do we see? We see the following thing. So we see that we have liquidity taken here back into this 4-hour imbalance, bullish imbalance. And what else we see? We have this amazing area. This is a balanced price range where price came down and now it's used as a ramp to go to the next liquidity level, which is our draw over there, right? Now, of course, that's the drawn liquidity, but can we refine that target even more? Let's have a look. One trick that I can show you is go to line chart and just have a look. Where does the price touch most of the peaks here? That one, and just do that. Do I believe this is the ultimate draw? Sure. Do I want a low hanging fruit target? I do. So this is the one. That's my low hanging fruit target for the day. Let's switch back. And what do you see? It's basically the candle body is here. And that's my low hanging fruit target. What else can we do to refine? Let's go to this exposure levels indicator. And what do we see? Right, we see that we have this gamma wall here that's acting like a pivot. We see that we have this transition zone here that's acting like support. And the next target would be 26,065. So I'm comfortable with the level I've set up here, a low hanging fruit target. Possibly if I'm in a trade, and that's a level inside. I could leave a runner to 26,065. What you see here in the gray information, that's a squeeze zone on the bullish side. So we've reached basically this monthly gamma exposure level. This would have been the target monthly, but now it's in a squeeze moving forward. It's squeezing the bull side. Now that's it for now. Let's have a look on the lower time frame just for kicks. On the 50-minute chart, we can see here this is the liquidity taken on the low side. I can remove that line. Very beautiful price action, if you ask me. And we could look at the intraday gamma exposure levels, 0 DT, and there we have it. Beautiful. We can see that we are in a bullish transition zone, transitioning from a bearish gamma to bullish after yesterday's move. This is the snapshot at the end of yesterday. So a snapshot before the market close, before the QQQ market close. So this will change. 6:45 a.m. ET. But until then, it's a good map to use. So if today we reach in toward the bullish side, yeah, that level that I set out, it's a good level to target. So 26,040. Now we also have the highest volatility level, 25,940, and if you look at where that is right smack into the middle of this range. So this impulse, we want it to reach in here and basically use this level afterwards as a ramp to our target. What we don't want to see, the bearish scenario here where price just spend some more time around this level, right? And it tests the lows. But yeah, it's it's in my opinion a bullish day. For this to turn bearish, because we need to think the other scenario as well. We would need price to actually come down all the way into 25,820. 25,820. Yeah, right into, and that's the equilibrium of this range from yesterday. If price does that and comes into this level, and then we can think about further price action towards the lows. Okay, then I think that's it for today, and I wish you trade safe and take care. Bye.